Good morning, everyone, and welcome to the 4th Annual International Women Teach Trading and Investing. And this event is brought to you by Timing Research and TradeOutLoud. The event is being recorded. All the recordings will be available as soon as they are processed on the TimingResearch.com website. More details throughout the breaks. David Cosmeter and I are going to be your hosts today. So before we get started, please remember that all the information provided by us today is for educational purpose only and should not be construed as investment advice regarding the purchase or sale of securities, options, futures, forex, or any instrument of any kind. Trading involves a high level of risk and may not be suitable for all investors because you could lose money. So before deciding to trade, you should carefully consider your objectives, your level of experience, and risk appetite. Individual performance depends upon each person's skills, time commitment, and effort. Results may not be typical and individual results will vary. You must do your own research and make your own trading decisions. And with us today, we have a fantastic lineup of pro female traders that are really happy to share insights into trading, insights into strategies, tips, and tricks for you. And now we have beautiful Valerie that is coming to you guys live from Portugal.
Hello, everyone. Good morning, or what is good afternoon for me on the other side of the world, probably for most of you. We were doing a little bit of a survey before this call started, and we have several people from all over the US, but I know these calls bring in people from all over the world. And so I'm excited to be here with you this morning or this afternoon or this evening, no matter where you are in the world, or if you're watching this after the fact in the recordings, that's awesome as well. So welcome, like Anka said, to the 4th Annual Women Teach Trading Online Conference, where I'm going to be sharing this presentation on cutting through the noise, trading myths versus facts. Woohoo. I'm like so mysterious in this presentation, right? So my name's Valerie, and I'm the author of what is actually a newly published book, my very first book. I'll be going into that in a little bit more later. I'm also the owner of the TradeFocus.com website and the ConsistentFXProfits.com websites, and the founder of the Bright Ridge LLC company. So some of you may know me, some of you don't. Just wanted to do a brief intro there. And just a little bit about me. I've been trading for over a decade, and I have been coaching traders around the world since 2019. So several years as a trading coach as well. And I'm just excited to have you all here to be in this presentation. So good morning, good afternoon, good evening, and let's dive in. I know Anka already did a disclaimer at the beginning, but I have a brief one real quick as well. This presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered specific investment or trading advice. All examples are for teaching principles and not intended to suggest future results. Any results shared are real, but should not be considered typical. The risk of loss in trading stocks, options, futures, and Forex can be substantial. Trading involves risk and is not suitable for everyone. Students and individuals are solely responsible for all live trades placed in their personal accounts. So now that we've got that over with, let's dive into the agenda for this presentation. I'm going to be covering the difference between a myth and a fact, which I think we all know, but just to kind of set the stage here for this presentation. And then we're going to be dispelling the top 10 trading perceptions. I will also be sharing what I believe to be a trading success formula for anyone out there who is on this lovely journey we call trading. And then lastly, I'll finish up the presentation by sharing what I believe to be the 4 stages of a trader's journey so that you can see where you're at. And then you can carry on and enjoy all the wonderful presentations that are going to be today and later this week. As we dive in, I just want to say thank you for being here, whether you're live or watching the recording. And as a thank you, I'm also going to be giving you early access to my new book, The Self-Reliant Trader Method: How to Build Your Own Strategy, Optimize Your Profitability, and Own Your Future. So this book literally just went live on my website today for sale, and you guys are all getting early access. It's, in short, a book for traders who want better results. I share with you a 4-step method to becoming a self-reliant trader and getting better results for yourself so you can empower your long-term success. The book itself is only $5, and it includes the digital version, so you can start reading today, along with a free bonus of the professionally narrated audiobook version for free. So thank you for being here. I'm really excited about this book launch. It's my very first book. It's been on my bucket list for years. It's been over a year in the making. And for anyone out there who's written a book, there's a lot that goes into it. So I'm kind of proud of myself here, but check it out if you want. No pressure either way, but I wanted you to get early access to that. So let's dive in to myths versus facts. So real fast, again, the definition of a myth is a widely held but false belief or idea. So a lot of times just human nature is that our beliefs and perceptions turn into facts. And so throughout the presentation, I'm going to be going through a lot of different facets of trading that I think are probably more of a belief or a perception than a fact. And then from there, I'll be diving into facts as well on that same topic. So something that's known or proved to be true. So with that said, let's dive in. We're going to have a little fun with this. I think these presentations are great because we have a fair amount of people who are live on the call. And I always like to try to make these a little bit more engaging. So what I want you all to do is be prepared to use the chat feature. I'm going to be asking you some questions as we dive into these. I think it's always just really cool to get an idea of who's in the audience, kind of what the realities are out there in the trading world among your peers. And it just makes it a more interactive presentation as well, or as interactive as we can be here on a webinar. So make sure you have your chat feature pulled up here on the Zoom webinar if you're live, and also change the chat feature to everyone. So you can have it just be the hosts or the panelists. I think that's the default. Make sure you change it to everyone so that for those that are live on the call, you can check out the conversation flow there. All right, so let's do the first one here. Perception number one, trading is easy. Would you call that a myth or a fact? Type in myth or fact, or M or F if you want to be faster. Myth, we've got some results flowing in here. Myth, okay. I agree, I would call that a myth. And really, the factual components that I think lead to people believing that trading is easy is the following. 90% of traders fail to make money. There's all these stats out there, 95% of people fail to make money in trading. I think there's a lot of components that go into those stats when they get quoted, but ultimately the failure rate in trading can be fairly high. So by default, trading can't be easy. But what I'd also say about that is trading may not be easy, but it is simple. When we think about trading and what it really takes, if you kind of zoom in to a really narrow focus, it's your entry and your exit price that ultimately determine if you're profitable on a single trade. And then it's the sum of your profit and loss dollars from all your trades that determine if you're profitable over time. And that's the goal, right? Just to make money over time. So in that light, trading is quite simple. It's entries and exits. And when you can find an edge to ultimately make more money than you lose, then trading becomes very simple. So trading may not be easy, but it is simple. Let's do the next one. Trading is about prediction. Would you say that's a myth or a fact? What do you guys think here in the room? M or F? Myth or fact? Myth, fact. Got a little blended approach here, rolling through the chat pane. Okay. I would say it's a myth. What I think is a fact is that no one knows where price is going next. And because of that, trading isn't about prediction at all. It's really about probabilities over time. So trading is not about being right or wrong or anything like that. It's really about, finding those entries and exits over the course of many trades by using an edge and ultimately making more money than you lose. So for me, I always, when I work with traders who are focused on right and wrong, I think, or predicting where price is going to go next, I really think you're just setting yourself up for failure, because it's not about being right or wrong. It's about probabilities over time. It's not about certainties. You're never going to be right 100% of the time, even with a very thorough, profitable trading strategy. So that takes us to our next one, which is the best traders never lose. Would you call that a myth or a fact? Myth, LOL, says Teresa. Myth, lots of myths. You guys are on to me. I agree, it's a myth. The truth is that no trader nor trading strategy profits on 100% of their trades. And what that really means is losing trades are always a part of trading. Even drawdown periods happen to the best traders and strategies out there. So what can you do with that information to really make it, use this fact to your advantage, is that risk mitigation and trade management are vital in trading. And we'll be talking a little bit more about both of those later in the presentation. Number 4, consistency is impossible. Would you say that is a myth or a fact? Myth, got some myths flying through. Got some deep thoughts. We got some hmms happening. Myth, fact. I think this is a myth. I think it's a false belief. And, I suppose it could go back to your definition of consistency. But what I mean here is consistent results over time are possible with consistent execution, right? We can't predict the outcome of an individual trade. No one can. But what you can do is, when you have an edge in the market that you can consistently execute on in a very objective way, you will get consistent results over time. So again, consistent execution is impossible without a written down, objective, straightforward trade plan. So trade plans really guide, trade plan, think of it as a very precise trading strategy where all your trading decisions are accounted for in a documented way and known before you ever trade. So I'm just curious, that brings me to just kind of a question for the audience. How many of you are using a written down trade plan, meaning you're trading something on a practice or a live account, a strategy, and you actually have your strategy written down on paper or in a document, kind of lining out your rules? Give me a yes or a no. Sometimes, but not always. Yeah, and there's, this is your reality. It's not, right or wrong, or there's no judgment here in this audience. Got yes, it's in my head, no. Okay, so I'm a big advocate, and you'll hear this come up again later in the presentation, of using a written down trade plan. We'll get more into it later, but how many of you, so it's kind of a blended reaction here in real time. We've got yes sometimes, yes hard to follow, no, it's in my head, yes. So let me ask you this. For all of you, how many of you are kind of making decisions in the moment versus knowing how you're going to respond to every single situation before it happens? So decisions in the moment when a trade's live, or even when you're analyzing your charts and looking for trade setups, is it more decisions in the moment, or is every decision predefined? So you're really just showing up and kind of an operating machine. So you're acting upon a setup more in the moment. Yes. So that's the difference between people who use a really thorough trade plan and people who maybe don't have all the details lined out. So if you find yourself making decisions in the moment or on the fly, or based on intuition, or based on your gut or your feelings or your emotions or anything like that, that's really a sign that your trade plan, in my opinion, that your trade plan needs to be, first of all, written down, of course, and second, more detailed. So when you have a really thorough trade plan, there's really no gray area in qualifying trade setups, in where you enter, where you exit in both profit and loss, how you manage the trade when it's live. Like those are all things that I believe should be thought out in advance. And it really goes back to this item number 4, which is that consistent execution of a trading strategy is impossible without a written down, objective, straightforward trade plan. And consistency is possible over time when you have that consistent execution, but without a very thorough trade plan where you're operating in a very consistent way over the course of many trades, how can you possibly get consistent results? So if consistency is something that you struggle with in your own trading results, this could be something that you should really think about exploring further, is getting that trade plan documented, really thinking through in advance, what is my edge? How do I know when it's present? You know, when do I trade? When do I not trade? You know, what am I looking for on my charts? What do I specifically need to see in order to feel like, you know, my edge or my trading strategy setup is present? And then how am I entering? Where am I entering? When have I lost my edge? And when should I get out of the trade if it goes against me? And then likewise, where should I ultimately be getting out of this trade and profit and lock it in because it's a really good return on the trade? So just food for thought for you guys. I could go on. I could derail this entire presentation and just talk about trade plans because I believe in them so much. And I've seen the impact they've made in my own trading, as well as, you know, thousands of traders that I've worked with. It really is a difference maker in driving operational excellence with your trading, which brings about consistency, which then brings about results that you can track. And then from there, you know, optimization of your trade plan can happen. Okay, let's go to the next one. Trading without a stop loss is better. Would you call that a myth or a fact? This one tends to bring up a little mixed bag as well. Got myth, no way. Myth, yes. I'm always kind of surprised sometimes when people don't use a stop loss. I'm a big advocate of a stop loss. And the reason for that is because without a stop loss, your true risk mitigation is impossible. Basically, I'm a firm believer that your stop loss should be determined before you enter the trade. And the reason for that, more specifically, just for anyone who might be listening that's like, oh, well, sometimes I don't use a stop loss, or yeah, I kind of just handle it in the moment and figure out where I'm going to get out if the trade goes against me. The reason you should really know your stop loss price or where you want out of the trade if it goes against you before you ever enter the trade is because this allows you to enter the trade using the appropriate position size based on your risk tolerance for loss on an individual trade. So really what I'm saying here is this goes back to really protecting your money, but also proper risk mitigation with trading. So you should know, what is your tolerance for how much you're willing to lose on a trade? Obviously, you wouldn't want to put your entire account on a trade. Obviously, even a big chunk of your account on an individual trade is probably not wise. So for me, I like to predetermine a percentage of my account, since obviously my account balance is ever changing. I allocate a percentage of my account to an individual trade. And it's quite a small percent. For me, it's a 0.5% risk on an individual trade. Now, I oftentimes have more than one trade live at a time. So I also have my max risk per correlated instrument predefined, my max risk for all active trades predefined, and then even max risk per month. So like really there's these layers of protection measures to make sure that I'm not over leveraged in any given period of time. So how many of you currently have that level of risk mitigation detail predefined for your trading endeavors? Whether you have it written down or not is irrelevant in this specific question. Do you have a risk mitigation plan for max risk per trade, max risk per correlated instrument, max risk per active trades, and then maybe even max risk per week or per month, depending upon how active of a trader you are. I'm seeing several yeses, so that's good. If that's not something you have today, that would be an easy home run to implement a risk mitigation strategy to protect your money. Cool. All right, let's go to the next one. Demo trading is useless. Myth or fact? Myth. Again, we're just using the chat feature here to get a little bit of engagement for those of you that might be joining later in the presentation. We've got myth, LOL. Okay, I would agree. This is a myth. So the fact is, you cannot make money on a demo trading account. Yes, that's a very obvious fact. So a demo trading account is never intended to be a long-term solution, but a demo trading account does allow you to test the implementation of your trading strategy without risking any money. So the purpose of demo or paper trading accounts is really it allows you to work through your own operational excellence roadblocks. It allows you to get results first before you put money on the line. And, once you've proven your abilities in a practice account, which could take a day, a week, a month, obviously, the time is different depending upon the trader's experience, et cetera, a lot of other factors. But, ultimately, once you've proven your abilities, you've gotten results on a practice account, then yes, of course, bump up to your live account and start trading with real money. But, a demo account's really where you can get vital education and experience at no cost. So I would say it's very far from useless. And yeah, John mentioned in the comments, it's helpful for confidence. Absolutely. Confidence is a huge thing with trading. People want to, confidence, I think, is the first thing that not emotion, but confidence is the thing that can impact a trader's belief in themselves the most. And confidence can be shaken very easily for traders. A couple of losing trades, and for some traders, they're like, oh my gosh, this isn't going to work, or I need to look for something else. So you need to have that kind of practical implementation experience of your trading strategy to know what's normal, to build your confidence, to prove to yourself you can do it. Like, why waste your money before you've done at least a preliminary kind of litmus test? So what do you guys think? Why do you think so many traders skip demo trading? Maybe you've skipped it in the past with a certain strategy, or other traders, or just whatever you're reading online. Why do you think so many people skip using demo trading or practice trading? Teresa says they don't think it's useful, but it's the best training. Absolutely. Anyone else want to share your thoughts? Danny says too eager to make money. Absolutely. A lot of people are like, well, if I can't make money, I'm not going to waste my time. Well, the opposite of that is you can spend your time, but you can lose a lot of money if you don't get a few things sorted out before you're trading with real money. Fear of missing out by Donald. Absolutely. John says, don't make any money. Yes. So yeah, there's a lot of reasons, but I think it all ties back a little bit. Lars says they think they already know how to trade. Oh yeah, that's a good one. Overconfidence, right? So whether it's you're new to starting out, or you've been training and learning a strategy for XYZ amount of time, a week, a month, a couple of months, you've been training, and you're just so eager that you're a little overconfident. You're like, I got this. And then you get into the real world, and then, you, again, whether you realize that maybe you're implementing flawlessly, or maybe you're not, but you're not getting the results you wanted, then your confidence bombs, then you start making bad decisions, or trading with your emotions, or deviating from the plan, and then it all kind of goes south from there. So yeah, there's a lot of reasons. I think impatience and over-eagerness and overconfidence are definitely at the top. Thanks for sharing, guys and gals. All right, number 7, more indicators are better. Myth or fact? What do you guys think? Use the chat box. Myth or fact? Myth, myth, fact, false. Myth that confuses you. I like that myth. Okay, I think we're all on the same page here, but I would say a myth for sure. The fact is you need an objective, straightforward way of identifying your edge in the market. But the number of qualifying factors that you use to identify that edge is honestly irrelevant, in my opinion. Another fact is that, maybe this is an opinion, but I firmly believe the more indicators that you use, the higher likelihood of confusion, right? So, generally speaking, indicators are just taking a bunch of historical data and giving you an output. And, they can be used as a helpful tool to identify trends, to make objective observations and kind of remove that emotion, and also to narrow a trader's focus as you're trying to find trade setups. So indicators are really, really great for that. But if you use too many indicators, it really just ends up generating mixed signals and conflicting conclusions. So I think in terms of indicators and your charting and what you're looking at, there is such a thing as too much. More is not always better. Yeah, John says they're redundant. Yep, totally. I would agree with that. All right, number 8, more screen time is better. Myth or fact? What do you guys think? Myth, fact, myth? So this one's kind of interesting. I've got a little bit of, we've got a mixed bag on this one. Depends, yeah. I call this a myth, and here's why. I think the fact is that just staring at a chart won't help you become a better or more profitable trader. So screen time, generally speaking, does not always equate to better performance. More screen time does not equate to better performance on like an equal playing field. I think what's more important is the type of screen time you're doing. And I think there's a lot of really great articles out there about how, really to master something, screen time at your charts specific to trading is really valuable, because there's so much to learn. You can't assume that you're going to pick it all up right from the start. And I totally agree with all that, right? But, really when we think about screen time, it needs to be really intentional. And what I mean by that is, if you want to become better as a trader, becoming better at anything is not performed by achieving the act itself, but instead by practice and preparation and discipline and analysis, right? So I talk to a lot of traders who, spend hours at their charts every day. And I'm like, okay, well, what'd you learn? Or what'd you do? Or how did you improve your trading? Oh, I just looked for trades. Oh, you spent like 8 hours at your computer today looking for trades? Are you a scalper? Are you like really high intensity trading? No, I only took 2 trades. And I'm like, so you spent 8 hours at your computer and you took 2 trades. Sounds like you're spending a little bit too much time at your charts, or you need to be more intentional with your time. And John said, yeah, Anka says trading is one of the most difficult jobs. Yeah, absolutely. Well, think about this. I have another interesting analogy. Pro athletes, right? They don't become great by showing up to the game. Their greatness really comes from honing in their skills, focusing on what matters, following through with a specific strategy of execution. And I'd say trading is no different. You become better through your preparation, reviewing your performance, actively refining your edge. So really the point I want to make here is, don't waste time glued to a screen and staring at charts without clear intentions, right? Plan your trades in advance, use a trade plan, show up when you need to, right? When your strategy produces trade setups, and then walk away when you don't need to be there, right? Use predefined stop losses and profit targets, and set price alerts or use alarms as you need, but don't just stare at your charts all day, you're going to drive yourself crazy. And honestly, that time spent is not going to make you a better trader unless you're being intentional. So perform that detailed post-trading performance analysis, use a trade journal. There's really good uses of chart time that make you a better trader, but not all computer time, screen time is equal. Okay, let's go to the next one. Number 9, higher risk reward to risk is better. Would you say that's a myth or a fact? What do you guys think? Higher reward to risk is better, meaning like a 2-to-1 is better than a 1-to-1, or a 3-to-1 is better than a 1-to-1. What do you guys think? Myth? Sometimes, but myth. Okay, I like it. Myth. I say myth. The fact is your reward to risk ratio alone does not guarantee profitable trading. And here's what I mean by that. Just because you're getting a 5-to-1 doesn't mean your trade plan is profitable. Because if you're only getting a 5-to-1 on 5% of your trades, which means you're only winning profiting that 5-to-1 on 5% of your trades and you're losing the rest, that's not a profitable strategy. The reason I bring this one up is because I feel like a lot of people focus on risk to reward ratios or reward to risk ratios, depending upon how you prefer to say that. We're all talking about the same thing, but I meet a lot of traders that are like, oh, I need that. I need to get a 2-to-1. I need a 3-to-1. I need a 5-to-1. Like that's how I'm going to make real money here. And I think they're forgetting about all the other components that feed into profitability, and that reward to risk alone does not guarantee profitable trading, just like profit rate alone doesn't guarantee profitable trading. So just because your profit rate on your trades is above 50%, meaning you're profiting on more trades than you're losing on, that also doesn't guarantee overall profitability, because maybe you're profitable, but you're getting less than a 1-to-1 or something, or, you can be profitable on 30% of your trades, which to some people, they'd be like, oh, you're not making money. But if you're on that 30% getting, a 5-to-1, then maybe you are profitable, right? So really, I'll go back to something I mentioned earlier, which is your entry and exit price are going to determine if a single trade is profitable. The sum of your profit and loss dollars from all your trades determines if you're profitable over time. And obviously your reward to risk ratio and your win rate, your lose rate, your break-even rate, all those things kind of together feed into your overall profitability and your profit and loss as a whole. But really the focus shouldn't be solely on any of these individual metrics, with exception to just overall profitability, right? So I think a lot of people get lost in the metrics and they focus on the wrong things. And then that leads to making decisions that don't really actually always add up to profitability in the long term. So yeah, that's my thoughts on that. Let's go to number 10. One strategy works for all, or I couldn't fit it all in my headline. One strategy can work for everyone is another way I wanted to say this. What do you guys think? Myth or fact? Myth. Yeah, this was maybe an easy one. It's definitely a myth, right? But the facts I want to share might be a little enlightening, right? So your trading strategy should align with your availability. I think some people are going to be like, duh. And some people are going to be like, huh, I hadn't thought about that before. And what I really mean by this is, when you think about setting yourself up for success long-term with a trading strategy, you should make sure it really fits in well with your availability. So, like I just think back in the past, in my early trading years, I was working full time. I was trying to get trading figured out. This was back in, like the early 2010s. I was trying to get it figured out. I was super eager. I wanted results like yesterday, and I was like willing to do anything. So, I'd read this article about how the London Open strategy was like the best strategy out there, right? And I was very green at the time. But, I was eager and I was willing to try anything. So I'm working full time in the United States. So I was like, hey, this London Open strategy, it's a really easy strategy. I could learn it quickly. I should be able to like make money with it, no problem, based on what I've read and what I've learned so far about it. So I was like, okay, yeah, I'm going to trade it, right? I'm going to get up in the middle of the night to trade. It only takes like 30 minutes to 60 minutes. So like no big deal. I'll just go back to sleep afterwards. But guess what? That's not something that's sustainable, nor, it was like very miserable, interrupting my sleep and waking up in the middle of my 8-hour sleep cycle. And I was tired and then I got lazy and I'd made mistakes and all kinds of things, right? But it wasn't the best time for me to trade. I didn't recognize that in the moment. Obviously, after the fact, I have, but how many of you have traded a strategy that requires you to be at your charts when you really can't be there, or when you're not your best, or maybe when you have other commitments like work or sleep or family? Have any of you done that in the past? Maybe you have, maybe you haven't, but just be sure you're being mindful of, you get to choose your strategy. There's literally endless trading strategies out there. And with all the markets you have to choose from as an individual trader, you can be picky. You should be picky. You should choose something that sets you up for success. Yeah, Danny says, tried it. It sucks. Yeah, just be picky. This is, you don't always get to choose everything in trading, right? Like you don't get to choose where price goes next. And if you don't get to choose if your trade profits or loses, but you do get to choose what you trade. You do get to choose when you trade. And you do get to choose a strategy that aligns with your own availability so that you set yourself up for success. Dee also mentioned you should match your emotional response and risk aversion. Absolutely. That's my second fact here. Your trading strategy should align with your trading personality and your personal preferences, like your trade management protocol preferences and your risk mitigation tolerance and risk aversion. Absolutely. I've worked with a lot of traders and I've done a lot of different programs to help support traders. And, I find a lot of traders are like, just tell me exactly what to do. Tell me exactly what to do. And I've done that as a trading coach, where I share my exact strategy, and it works well for some people and they do it. But a lot of people it doesn't work for, because guess what? We're different. We aren't available to trade at the same time of day. We have different risk tolerances. So, the risk mitigation parameters are going to be different. Or, for me, I'm a very conservative trader. I like to lock in my profits early and go on to the next trade. Whereas other people like to look for those higher reward to risk ratios, or they want bigger moves in the market, or, even just the quantity of trade setups that happen. I am a very hands-off trader. I used to want a lot more action though. So I've been on both sides of the fence, but certainly a very active scalping or intraday trading strategy is going to be a great fit for one trader. But for another trader, that's going to be too much chart time, and they're not going to have enough time in their day to really properly manage the trades. So maybe a swing trading or a position trading strategy would be a better fit. So just make sure you're being real with yourself as you identify how you're going to trade and what strategy you're going to use, and make sure you do self-checks along the way to really find a strategy that works well for you, because there are endless strategies out there and you shouldn't have to settle with the strategy that you're using. It should feel like a good fit, both in terms of when you have to show up, how frequently you have to show up to trade, how many trades you're getting from a quantity standpoint, and then also just the trade management protocol and your win rate and all those things should really be aligned with your own preferences. And I said I was only going to do 10, but there were two more that I'm going to throw in as a bonus here, because it was really hard for me to narrow these down as I was building my list. So the next one, second to last one here that we'll cover, is trading is emotional. Is that a myth or a fact? Let me know your thoughts in the chat box. Fact. I could see why many of you think this is a fact. Emotions come up in trading. Absolutely. But does trading always have to be emotional, or are there ways where you can make it emotion free? And I would say yes. So I called this one a myth. And the reason is I think trading is transactional. It's a trader's reaction to the outcome that creates emotions. And when you focus on the outcome of a trade, that's when the emotions come up for people. So I think trading is actually not emotional and does not need to be emotional. And when you focus on the execution of your trade plan and not the outcome of a trade, emotions disappear from trading. So that's something that I've personally experienced. It's something I teach my clients when I teach them trade plans and how to really focus on, if you're focusing on, oh, I lost on that trade, that is going to bring up fear missing out, bring up stress and like, is this going to work? And I'm doubting myself, et cetera, et cetera, et cetera. But when you take a trade and instead focus on, did I follow my trade plan? Did I flawlessly implement my rules for trading? And that's what you focus on. Whether you win or lose, it's the same, right? Whether you win or lose on a trade, your focus should be the same, which is, did I follow my trade plan? Did I qualify the trade properly? Did I enter at the location that I had predefined? Did I exit where I said I was going to exit? Did I follow my rules? And when you focus on that, which is something you can control, the emotions go away, right? And you might have some like self beat up, like, oh, dang it, why did I make that mistake again? Or how did I miss that trade? Or, some of those are natural, but obviously if you're tracking your results and you're holding yourself accountable to following your trade plan over time, those mistakes really start to become few and far between, if not like non-existent. So I think trading certainly can be emotional. I don't think it should be when you're using a trade plan and when you're focused on the right things. And then the last one here, number 12, negative results with a strategy means you should move on. What do you guys think? Move on to like the next strategy or something else, or give up, or whatever that move on means. But is that a myth or a fact? No. Yeah, Teresa says myth, study what went wrong. Absolutely. So, the fact is you've got to treat trading like a business and not just a hobby. And just because you're getting negative results, I'm not trying to say that you're treating trading like a hobby. What I'm really saying is there's a certain level of personal accountability and discipline and optimization that is incredibly vital with trading and often gets overlooked. So a lot of people will learn a strategy, implement it, not make money with it, and say, okay, well, that didn't work, I'm on to the next, right? Yeah, D, exactly, tune your engines. Really, when you think about your results, if you're not getting the results you want, instead of starting from ground zero with an entirely new strategy, being subjected to, shiny object syndrome and like never focusing on a single strategy, I would challenge you, if you're not getting the results you want with trading, to focus on one strategy and really dig in, right? Like, have you learned the ins and outs of the strategy? Do you have a documented trade plan that outlines all of your trading decisions? Have you implemented it flawlessly? Because a lot of people are like, yeah, I have a trade plan, I'm still not getting results. Well, are you holding yourself accountable to that trade plan? Are you making sure, are you following up after the fact when a trade's over to make sure that it was in fact a qualified trade, and making sure that you followed your trade management protocol and that you didn't over leverage yourself with correlated instruments? And did you meet all the rules in your trade plan? Did you use your predefined stop loss and take profits, or did you move them? Were you able to flawlessly execute on the trade management when the trade was active, meaning if you said, hey, I'm going to move my stop loss to break even when XYZ happens, did you actually follow through with that in the moment? Or did you forget to come back to your charts? Or did you go to bed early? Or did you hit snooze? Or, all these excuses can come up for personal accountability of flawless implementation. So I think that's something that is often overlooked, where people are like, it's not me, it's the strategy. But a lot of times you have to do a little looking in the mirror to say, like, am I doing everything right? And if the answer is yes, then that doesn't necessarily move on either. It means like, hey, what can I do differently, right? Remembering that trades are just about entries and exits, and two traders could identify the same trade setup, even enter at the same location, but one could be profitable and one could take a loss purely based on their trade management and where they have their stop loss and take profits, and how they manage the trade as it moves in their favor. So like, have you really looked into optimizing your actions within your trade plan to make sure that you've kind of ruled out everything that could turn your negative results into positive ones? Because really the same thing is going to keep showing up if you're not treating trading like a business in that way and doing that proper due diligence, right? And it's not just a couple of trades, right? You need a meaningful sample size of trades to really look at performance. There are plenty of trading strategies out there and trading styles that will have, a negative week or a negative month, but for the year, they're still very profitable. And so you can't let short-term results discourage you. So, tracking your performance, analyzing your results, making sure you're looking at a large enough sample size of trades, and if you're like, well, I don't want to have that kind of drawdown while I'm learning, well, use a practice account, right? Give yourself several months or 6 months or a year on a practice account. I mean, if depending upon how much, you really want this, there are ways to learn and optimize a strategy in order to get the results you want. So, commit to your trade plan, track your performance, optimize your entries and exits, and don't fall into the cycle of giving up before you even give yourself or a strategy a chance to succeed, right? So, I say this very lovingly and delicately, but no one else is responsible for your trading results except you, right? So when you kind of really let that sink in, you're the one pulling the trigger every day saying, I'm going to enter this trade, I'm going to enter here, I'm going to exit here. So it's like, how can you make sure that you're making good decisions consistently in a very objective, emotion-free way over time? And that's what trading is all about. It's, like we said earlier, it is not easy, but it's simple. There are a lot of things that can derail you. But when you focus on the right things, it can really make a big difference to your results. Okay, so those are the 12 things. Let's just do a quick recap, and then I'll wrap things up here. I know I'm getting close on time. So 1, trading may not be easy, but it is simple. 2, trading is about probabilities, not certainties. 3, no strategy profits on 100% of the trades. So losing will always be a part of trading. Losing on individual trades will always be a part of trading over the course of many trades. 4, consistent execution will yield consistent results. So if you're not getting the consistent results that you want, you need to probably look at your execution and your ability to consistently execute a trading strategy. 5, using a stop loss allows you to implement risk mitigation. 6, demo trading is not useless for all the reasons we covered earlier. Continuing on here, 7, more indicators are not always better. 8, staring at your charts won't make you a better trader, but being really intentional with your time and learning and optimizing your trade plan will. 9, your overall profitability is most important. So don't get caught up in some of those little individual performance metrics that can have you focusing on the wrong things. 10, trading strategies are not one size fits all. Remember, you have a choice with what you trade. You have a choice with your trading approach and style and the time of day you trade and the market you trade and the trade management protocol you're using and your risk mitigation tolerance. Those are all controllables within your options of choices. So make sure you're choosing something that's a good fit for you. 11, trading should not be emotional. If you find yourself very emotional when trading, lean on a trade plan, lean on an objective, kind of methodical, objective way of trading that, honestly, when you use a trade plan, trading goes from like exciting and thrilling and like, oh, what's today going to be like? It goes from that to, honestly kind of boring because it's like, I have a plan. I'm going to show up. I'm going to do it. I'm not going to be attached to the outcome. I'm instead just going to focus on becoming this flawless executor of my trading rules. I'm going to really focus on operational excellence and that's it, right? So shouldn't be emotional. And if it is, there's ways you can mitigate it. And 12, personal accountability, trading discipline, and strategy optimization are all vital to your success as a trader. So hopefully you had maybe at least one aha moment in there or a little takeaway for going and improving your performance or your results or how you're showing up or how you're treating trading in your life. Before I finish up here, I just want to share 2 other little nuggets. The first is what I call a trading success formula. So, again, I think traders focus a lot of their time and energy on the strategy, but strategy alone is not enough. So let me just pick your brain for a moment here. If trading was a 3-legged stool, what 3 things do you think would be most important to trader success? Type it in the chat box here. What 3 things would be most important to trader success? And if you were missing one of them, you wouldn't be successful. I'm going to share with you my thought here in a minute, but I love seeing everyone's ideas. Sorry, I guess that probably wasn't an easy thing to type. So thanks, Danny. Danny said strategy, psychology, and money management. Yes, all great ones. Anyone else want to share? Give it just a few more seconds here. Dee said trade plan, following the plan, and discipline. Absolutely. So if I had to make a 3-legged trading stool, I would say the following. I would say knowledge, which builds confidence, allows you to have an understanding of your trading strategy, have it documented, etc. Like you have to know enough to be able to implement. And then from implementation, I think it comes discipline, which is, actually following through with your trade plan, showing up, treating trading like a business, holding yourself accountable, etc. And then I'd say the third one is mindset mastery, really your thoughts influence your actions, which influence your experience, which influence your perceptions, and then it's like an endless cycle. So I think having a really healthy mindset about trading, about what the possibilities are, understanding what you control, what you don't control, and again, mitigating all those emotions that tend to show up with trading is really, really important. Teresa also shared in the comments, consistent profits, discipline, and continuous learning. Absolutely. So yeah, there's a lot of different ways you could slice and dice it, but there is more to trading than just a trading strategy. And I think we, based on the comments, all agree with that. And then lastly, I think there's basically this journey of a trader as you develop mastery, as you gain experience, as you work towards your consistent performance and ultimately your success long-term in a trader. I would divide it into 4 stages. And the time it takes to get from stage to stage or ultimately to stage 4 is different for every single trader. But stage 1, I would call building your personally aligned trade plan. Whether you learn that from someone else, you research and study and build it yourself through practical experience is irrelevant, but building and documenting a trade plan that's aligned with you and your personality and your availability is what I consider to be stage one in the very beginning, because from there, you have to implement that strategy. You have to work on your operational excellence. You have to really make sure that you can follow the rules, whether that's because of them being clearly defined and objective, or maybe that's, your own personality style and making sure you're not making decisions on a whim because you feel like it. And in this implementation stage, that means you need to track your results, you need to use a trade journal, you need to monitor your performance. That gives you your baseline implementation of a strategy, right? From there, you go to stage 3, which is optimizing your profitability. Whether, maybe in stage 2, you're already profitable and you're like, I got this. For me, I think no matter how profitable you are in stage 2 of your implementation, you should still take the time to optimize your profitability. You could be leaving money on the table with your trade management protocol or, where you're entering or exiting. So I think an optimization process is really valuable for any trader once you've really gotten that flawless execution. And then stage 4 is once you're profitable and you're maximizing that profitability, from there you scale, right? Once you're getting results, assuming that you've have a documented trade plan, you're able to implement it flawlessly, and you've taken the time to optimize your profitability, the next and final stage is really to scale your growth, whether that's with your account size, your maximum risk, the number of trades you're taking, how often you're trading, et cetera. There's a lot of different ways you can do that. So I'm curious, for those of you on the line, what stage are you currently at in your trading journey, would you say? Stage 1, stage 2, stage 3, stage 4, or stage 5? Give people just a moment here. And I'm almost done. I've got one more slide here. So we've got someone at stage 3. I'll let you guys type while I just go to a quick recap. I'm in all of them, Teresa says, LOL. Yeah, that's fair. 2 and 3, 2, 3 and 4. Awesome. Thank you guys for sharing. Your participation, I think, has made this really enjoyable. Quick recap. We covered myths and facts, top 12 trading myths versus facts, the trading success formula, and the 4 stages of a trader's journey. If you guys want more on these topics, they are all interwoven into my new book. So thank you for being here. As I mentioned at the beginning of the call, you all are getting early access to my new book, The Self-Reliant Trader Method. It's available at TradeFocus.com. It's only $5. You get a digital copy and a free audiobook copy as well. So TradeFocus.com. Thank you guys so much for your time, for your participation. I hope you had at least one aha golden nugget from the presentation. I love doing these. Thank you, David and Anka, for having me here.